Welcome, everyone. I see that we are gathering here with our attendees, so I will give us about another 30 seconds or so before we begin.
Ken, can you turn up your mic a little bit?
All right. Well, we've got a good number of folks, and again, we may have a few more join us, but we'll go ahead and get started since it's about 2:31. Welcome, everyone. My name is Ken Scroggs. I am MAR's Governmental Affairs Director, and we appreciate your willingness to spend a little time with us this afternoon. I know there are a number of folks that have many questions about the most recent piece of legislation that passed the U.S. Congress, the CARES Act, among other things. So we've got some subject matter experts from NAR, both Aaron Stackley and Drew Myers are here to kind of do a review of that legislation, talk about some of the highlights, and also potentially talk about Phase 4. There could very well be a fourth piece of legislation that is passed as it relates to the current pandemic. So we also have with us Sean Massey, who is the 2019 Commercial Council President, our immediate past president of the Commercial Council, and he's going to talk a little bit about the current environment our commercial practitioners are finding themselves in, offer some advice, share some suggestions of some best practices in the commercial world. And then we also have Jason Pauley, who is our MAR Board of Directors Commercial Liaison. And so Jason, of course, is a practitioner, has been for a number of years, and he's going to share some of the experiences that he has had over the last few weeks. And again, this is just simply to share some ideas, some best practices, and provide you all with timely information as it applies to this most recent CARES Act legislation. I'm going to share my screen and show you all, if I can get through to it, and I apologize. Everyone's names, their contact information, phone numbers, if you need this, and then we will, of course, share this with the group further on down the road should people be interested in contacting any of these four panelists today. For our attendees, if you run your prompt or your mouse over the lower bar of this WebEx, you will see there is an opportunity to answer questions of the panelists. You can also communicate amongst yourselves via the chat option. And so we welcome, as we get through, into this presentation, that you ask questions of the panelists or each other. I will be happy to relay any of those. So with that, I am going to turn the program over to Drew Myers, our political representative. Drew represents a number of states. He works a number of states within the southeast region of the country, or NAR, is our primary point of contact at NAR. And he and I have been working very closely together over these last few weeks to try to get information out to our members. So, so with that, Drew, the floor is yours.
All right, Ken, thank you very much. And I just have to say, as you were shifting things around and pulling that screen up, sharing your screen, I noticed that you have a significantly cleaner desktop than I do right now. So That's to
Cleaned
be
it up
commended.
about 5 minutes ago.
To be commended. It's a hard thing to do these days. So as Ken said, good afternoon. My name is Drew Myers. I am NAR political rep, covering a variety of states across the Southeast, Mid-Atlantic up to Pennsylvania. Fortunate to have the opportunity to work, of course, with Tennessee, and got to know Ken and probably several of you out there right now. Look forward to when the time comes that I can get back to Tennessee and see you all again in person. But I want to spend just a couple of minutes giving you a brief update of some of the things that we've started working on from an advocacy front, as well as outside of that, some resources for you all that you can access. And then we'll kick it over to my colleague, Erin Stackley. I'm thrilled that she was able to join us because she will really be able to get into the details of some of these things that we're working on here. She's our expert, certainly on many of these issues. But just to start, I would be remiss to begin with if I did not mention that we have launched a microsite, a page on our website that's serving as a centralized hub for all, most of the information that you'll hear us talk about today, as well as more. And so those resources are available at nar.realtor/coronavirus. If you have not seen that page yet, please certainly make it a priority to take a look. Lots of great resources there. And in addition to that, we have also recently activated a program that was first initiated back during the 2008 crisis. It's a program we call Right Tools Right Now. And so this program makes new and existing NAR products and services available for free or at a significant discount to members. So again, you can learn more about this program on our website. In addition to that, NAR has repurposed our hotline to take questions now specifically related to coronavirus, essentially anything and everything coronavirus related. So certainly feel free. Of course, you can find that number on our website. It is also, if you're ready to jot it down, 1-800-874-6500. So 1-800-874-6500. With that said, I want to take just a minute to get into the first two bills that passed really, I guess, in the last month or so related to coronavirus. The first one, what you heard called Phase 1, HR 6774, the Coronavirus Preparedness Act, Preparedness and Response Supplemental Appropriations Act. Sorry, it's a mouthful there. But on March 5th and 6th, as an immediate response to the impact of COVID-19, Congress passed and then subsequently the president signed into law HR 6074. This legislation provided about $8.3 billion in emergency funding designed to treat and prevent the widespread transmission and effects of COVID-19. Targeted at slowing the spread of the virus, the Phase 1 legislation allocates a significant portion of the funding to HHS, the Department of Health and Human Services, for vaccination research, CDC, emergency funding, medical equipment, and the like. So really largely healthcare related and specifically focused for emergency disaster relief. About 2 weeks after that, on March 18th, Congress passed what you heard called Phase 2 of the relief efforts or the stimulus package. This was HR 6201, the Families First Coronavirus Response Act. And this legislation provided for free COVID-19 testing nationwide. It created and expanded emergency paid sick and family leave for workers affected by the virus, including those who are self-employed. Additionally, in order to support the businesses that through this legislation are now required to provide the expanded sick and family leave, the legislation also creates 100% refundable tax credits that provide dollar for dollar offsets to businesses for the cost, to cover these costs. In addition to that, in an attempt to offset the anticipated burdens of unemployment, which we're now seeing and feeling, this bill provides about $1 billion to states to process and pay unemployment. So the second phase was really largely focused on providing relief to individuals who are finding themselves out of work. With that, I will now kick it over to my colleague, Erin Stackley, who will get into some of the details of the Phase 3 legislation that was just passed this past Friday, about a little less than a week ago now. So with that, Erin, take it away.
Thank you, Drew. Thank you, Ken and Jason, for having me on this call today. Happy to talk to you all about some of the positive things we got in the CARES Act, including, I'm going to begin with the SBA programs, because those are the things we've been getting the most questions on. The CARES Act did something kind of novel. It really focused a lot of the relief support through two new programs within the SBA. And in order to make those more effective, they have expanded the definition of the small businesses that can apply for these. So in general, before I even talk about the programs themselves, small business for purposes of these programs are any business with 500 or fewer employees, independent contractors, sole proprietors, and the self-employed. So that is a much broader definition than we're used to. There's no revenue standards, et cetera. Obviously, if you already qualified as a small business, you would qualify for these programs as well. The two new programs that they've created, the first is the Small Business 7A Paycheck Protection Program. And the second is a grant program that has been added to an existing loan product they had. And that's the Economic Injury Disaster Loan Advance Grant. So I'm going to first talk about the Paycheck Protection Program, or PPP. PPP loans are for employers. They will be based on the average monthly salary for the year prior to applying for the loan. And the purpose of them is to keep these small businesses in business, but also keep their employees paid during the 8-week period they're intended to cover. So the max amount you can get for a PPP loan is $10 million. And the way that they are going to figure out how much each business gets is you're going to go back through your average monthly payroll cost. You're going to calculate out what that average is, and then you qualify for 250% of that, or 2.5 times that number. Then that money can be used for payroll, rent, mortgage interest, and utility costs. If you use the funds for those eligible uses, and during the 8-week period that the loan covers, you maintain at least 75% of your average monthly payroll costs, and you keep all of your employees on staff, so your headcount remains the same, 100% forgivable. These loans are to be administered through SBA lenders. So if you already work with an SBA lender, that's who you should go to. If not, you can find an SBA lender through the SBA site. And I'm going to talk a bit about some of the uncertainty that we have with this program, which technically launches tomorrow after I cover the Economic Injury Disaster Loan Grant. So put a pin in that. The Economic Injury Disaster Loan is an existing program. If any of you were paying attention, it feels like a year ago, but it was, I think, 3 weeks ago, the administration announced that the COVID-19 pandemic is a qualifying disaster to apply for these loans. Unlike other loans, you don't have to have physical damage to your place of business that's keeping you from being open. These are intended to cover economic injury from a disaster. So you can get up to $2 million through this program, and that's based on your working capital needs. These loans are not forgivable. You do have to pay them back over a 30-year period. However, what they have created with the CARES Act is a $10,000 advance grant. And when you apply for an EIDL loan, you can request this advance grant. EIDLs are administered directly through the SBA. So if you're going to apply to those, go to the SBA EIDL application page. And if you go to NAR's FAQ on these loans, we've got links to all of these and everything else you could want to see. The $10,000 advance is supposed to be dispersed within 3 business days by the SBA. That's ambitious, but that's what the law says. So hopefully they're able to meet the demands there. And if you use the advance for the eligible uses, that $10,000 would be forgivable in and of itself. So the eligible uses for this are very similar to, but not exactly the same as for the Paycheck Protection Program, in that you can use it for payroll costs, you can use it for utilities, for rent, you can use it for mortgage payments. So not just mortgage interest as in the Paycheck Protection Program. You can also use it if you incur costs due to supply chain disruption as a result of everything that's going on right now, frankly. So let's talk about some of the unknowns with these. Both of these are available, as I mentioned, to independent contractors, sole proprietors, self-employed, or small businesses with 500 or fewer employees. The number one question we're getting is either some version of this. I am a small business owner. I have full-time employees, and I also have some independent contractors that I work with. Do I include the independent contractors in my employee head count, and thus also include their payroll in the average monthly payroll amount? Or do I exclude them and just use my full-time salaried employees, salaried employees, part-time employees count as well? And then the other version of that question is, I'm an independent contractor. Do I receive these funds through the businesses I contract with, or do I apply for my own? And the answer is, we don't know yet, but we are hoping to have an answer by tomorrow, because tomorrow again is when this program officially launches. From speaking with Congressional Committee, it sounds like the intent behind the legislation was that, to the extent that independent contractors are paid by businesses they work with, those businesses would include them in their head count, include their average monthly salary in their payroll count, and pay that out through the Paycheck Protection Program. Then, on top of that, as the independent contractor, as a entity unto itself, they would be able to apply for their own 7A loans to cover their own internal costs. Now, the administration really doesn't want double dipping. So there's going to be some documentation requirements here. And again, we need clarity from the SBA. What we have been hearing from the lenders and from people that have reached out to their lenders is that the lenders are very wary about this launching tomorrow, because they just don't know what documentation they need to be collecting from people. We have the application page linked to on our FAQ. This is for the Paycheck Protection Program loan. And there is some guidance from the Treasury for sole proprietors and for small businesses. The application process opens tomorrow. For independent contractors and self-employed, it opens a week from tomorrow, which is April 10th. Yes, it's April 10th. Every day is just day when you work from home. So we're hoping that by staggering these application processes, if we don't have that specific guidance on independent contractors by tomorrow, we will 100% have it by next Friday. But obviously, an ideal situation is everyone knows what's going on before anyone can apply at all. So like I said, we've been talking to committee staff, we've reached out to the SBA, talking to the bankers and to other trade associations. We'll be updating all of our resources as we get more information on that point, and just make sure that you all are informed so you know what you need if you are personally applying for these loans, and you can also advise your clients on what they need if they're applying for it. There's been a lot of questions about whether or not you can apply for both loans, and the answer is yes, but you can't use the two different amounts that you would get for the same purposes. So if you're going to get both an EIDL and a Paycheck Protection Program loan, make sure that you keep very clear records and a good accounting of how you spent each of them, which expenses they went toward. If you get both, then the $10,000 advance EIDL would not be forgivable. Only the Paycheck Protection Program loan would be. But we understand that the amount that people get from the PPP loan may not be enough to see them through the end of it. It's intended to cover 8 weeks of expenses, and again, keeping that number for the payroll costs up. So considering that right now, for example, in Virginia, they're going to be shut down until June 10th, I believe. 8 weeks of payroll coverage might not be enough to keep all your employees on and your rent and your utilities paid. So people may need to be applying for both of those programs, and they are able to do that. They just won't be able to use the funds for the same costs, and the $10,000 advance wouldn't be forgivable. those are sort of, I know that was pretty high level on these, and people have a lot of very specific questions about the SBA programs. And so I encourage you to type your questions in the chat box if you have any that come up. The other thing that I wanted to talk about really quickly is some of the other things that are positive in the CARES Act. We had a lot of questions we've been getting about multifamily property owners, landlords, and the property management companies, because a lot of the news that's out right now is about how states and localities are enacting these eviction moratoriums. And even if there isn't an eviction moratorium, a lot of people aren't able to make their rent because they're not getting paid. So what does the owner of that apartment complex do if they're not collecting rent because their tenants literally can't pay rent, but then they're unable to pay their mortgage? We did get some relief in the CARES Act on that front. Basically, what we have from the CARES Act is that if there is a multifamily property, and that's 5 units or above, that is in some way sort of touched by the federal government. So it's FHA, Fannie or Freddie, insured or backed anyway, then they can apply for a 30-day mortgage forbearance period, which can be extended twice, so up to 90 days of mortgage forbearance. If they apply for that, though, they then must have at least 120 days, I believe, of a moratorium on evictions for their tenants. So better than nothing, especially because a lot of people are looking at potentially having an eviction moratorium anyway. But what we have been asking for and what we'll continue to ask for in phase 4 is, first of all, if you're going to have a mortgage forbearance period, great. Marry it up to be the same amount of time as the eviction moratorium as well, because it just doesn't make sense to leave one party on the hook for 30 days that the other party isn't. From talking with some of our commercial members and some of the property managers that we work with, people are sort of taking an approach of, you know, reach out to your lender, talk to them, see where they have wiggle room if you can, and then talk to your tenants and figure out a way that you can contract for getting that rent eventually, whether that's something where they have to pay all the rent owed over the course of the remainder of their lease, they have to pay it on the last day of their lease, whatever the case is. It's better to have a way to get that rent eventually than have apartments sitting open because people had to move out because they couldn't afford the rent. Again, we're continuing to push for that landlord and property management relief as well, really stressing that this is a whole ecosystem, it's a chain. So if you help the tenant, but then you leave the property owner on the hook for the mortgage, it doesn't in the long run make anything better for people because they're going to lose that property anyway, and then nobody gets to live there. Let's see. Should I talk about phase 4 now?
I think, yeah, because there rumors are, so it sounds like they're already beginning to work on phase 4. So if you can share with the audience what you know as of today, that would be great.
Okay. What I know as of today is mostly rumors and mostly stories of, you know, if you were watching the process for the CARES Act unfold last week, you saw a lot of bipartisanship, the House and the Senate and Mitch McConnell and Nancy Pelosi and the president all coming together to address this issue, and that has already sort of started to crumble. 2 weeks of bipartisanship, that's not bad these days in DC. So Nancy Pelosi announced that they are creating a committee specifically to focus on coronavirus issues, and the House is going to be starting to look at the phase 4 provisions for their bill. It's probably not going to be quite a smooth sailing for this. CARES Act was $2.2 trillion, the biggest relief package we've ever passed in the history of this country. So going forward, as we go from sort of the macro level down to the micro level of where we're targeting relief and the different programs that we're creating, we can expect to see more pushback about who's getting what money, how much, how are we going to pay for it, etc. So not to say that we won't get a phase 4 package. I think everyone expects there to be that, plus probably little mini packages coming out in the near future. It's just a question of how big will it be and how difficult will it be to get it through. Some of the things that NAR is seeking, and this is both in the phase 4 package and also just generally with the administration. First and foremost, we want to see the deadlines for 1031 like-kind exchanges extended to reflect the impact that people not being able to leave their homes is having on being able to find replacement properties and finish those exchange deals. This is something that we've asked for from Congress, but we also think can be accomplished through just the Treasury Department directly. And I'll say, I don't think that this is something that's not going to happen. It's just going to be a matter of when it happens based on whatever the crisis of the day is that the administration is dealing with. So I'm optimistic that we're going to get that. It's common sense, and it would just be ridiculous not to. On that same point, we're also asking for an extension for opportunity funds. These are the investment vehicles for actually deploying investments into opportunity zone developments. They have a 31-month working capital safe harbor for holding on to those investments before they actually begin a development. That can be extended up to 62 months with the investment of more cash into those funds. Now, 62 months is a long time. Some people think it's a long time. But if you aren't going to get more cash into those funds and you're only working with 31 months to begin with, and you have, 3, 4, I'm not even going to guess how many months where all these projects have to be put on hold as a result of this, then that could really dig into your safe harbor period. So we're asking for an extension for that deadline as well. We are working with a broad industry group to request in phase 4 legislation a business and employee recovery fund. The way we're talking about it is the small business administration programs should be considered a down payment on how we're going to move the economy forward as we go through this. It's great. They're bringing in some cash and they're helping out the people that are being immediately impacted and are perhaps the most vulnerable in terms of businesses to this type of economic issue. But what we're going to need is an infusion of liquidity generally into that space, especially when we're talking about retail and restaurant properties, which many of which have had to have their doors closed for weeks already at this point. So we're working with some other industry groups to ask for that business recovery fund. It would be similar to the Paycheck Protection Program, where these businesses would get, it would be a federally backed fund. Businesses would get money, and it would be contingent upon them keeping employees on salary. But the idea is, we can get through this, but if businesses aren't reopening when it's done, then the economic impact is going to stretch way past when the pandemic itself is over. So we need people to be able to immediately open their doors, start selling their wares, selling their food, etc. once we can all leave our homes again, whenever that is. So that's one of the top things that we're asking for in that as well. Those are sort of my highlights. I specialize in the commercial association, or excuse me, the commercial area. So if I'm missing something on the residential side, please speak up and let me know, and I'm happy to take any questions.
Ken, if I could, just wanted to add an additional layer on top of what Aaron was just speaking about regarding phase 4. There is the Secure Notarization Act has been floated around there for the last few weeks, floated around in DC for the last few weeks. And essentially what it says is that right now there are about 23 or 24 states across the country that allow remote online notarization. So essentially what we're seeing is in times like these where we're all sheltering in place and not being able to gather in groups more than, I think, 3 people in many states, there is concern that real estate closings are going to potentially be put on hold. Transactions will not be able to close in many states. So I think 23 or 24 states that currently have laws on the books that allow remote online notarization. I believe Tennessee is actually one of them, but the rest of the country, over half the country, doesn't. And so in those states, there's concern that could really create a backlog and be many real estate closings and other transactions, loan transactions that would need to be closed that would be put on the back burner. So the Secure Notarization Act would essentially provide a federal solution across the country to allow for this. It's something that we started work on just a couple of weeks ago, having conversations on the Hill, and I think it's something that we're looking to potentially get included in the next round of legislation so that we can solve that problem. The other thing, and Aaron, you may have just mentioned the 501c6 piece. Sorry, if you did, I'm just repeating this. So we've had some questions come in regarding whether 501c6 organizations are included in the CARES Act or other legislation. It is our understanding that there was a time before the legislation passed that those conversations were happening, and in fact 501c6s were. Before the legislation was passed and signed into law, 501c6 organizations were removed from benefiting from this legislation. Currently, it's just 501c3s. We're okay for now, but I think that is definitely a big thing that's top of mind for us to do what we can to include that in the next round of legislation. I know we've got some conversations happening right now, just today even, with some coalition, doing some coalition work to ensure that we can do what we can, knowing that I think most, if not all, of our local and state associations are operating as 501c6s. So just another thing, again, we are aware of it and certainly on top of it, and we'll be doing our best to ensure that 501c6s are covered in any future legislation.
That's great. Thanks, Drew. Aaron, we do have a question from the audience. Can independent contractors now file for unemployment?
So I'm going to give the best answer I can to this. Unemployment issues are handled by another one of my colleagues, but we've been all talking so much this week about everything that I think I can give a decent answer, and Drew maybe can add on to it if he knows anything else. Self-employed individuals, including independent contractors and other people who are unable to work as a result of COVID-19 and wouldn't normally qualify for regular unemployment benefits under state law, may be eligible to receive pandemic unemployment assistance. However, this excludes individuals who have an ability to telework with pay or individuals who are receiving sick leave or other paid leave benefits. We are unsure as to what ability to telework means, especially when it comes to our members that are agents and, how do you sell a house? You can't go to the house. The period that this will cover is January 27th through the end of this year. And the benefits will be administered by the states, but in accordance with the CARES Act law. There is a maximum of 39 weeks assistance, and the amount is equal to what is authorized under the state unemployment compensation law, plus an additional $600 per week for up to 4 months. So the answer is maybe. And we are seeking more information and clarity, especially on that ability to telework phrase, because we haven't gotten a lot of guidance, a clear outline of what that means yet.
Great, thank you very much. I don't think we have any other questions from the audience at this point. So that just means that you have answered all of the questions in your presentations. You've done such a great job with all that. So thank you to both of you for sharing that information. So So I think what we'll do now, Sean, is I'm going to pivot and move to Sean Maxey. And Sean is going to present on some of the experiences that he's already gone through, maybe offer some advice for our group. And he actually has provided me with a PowerPoint. So I'm going to share my screen and advance through the slides as Sean presents. So let me see if I can do that.
I am on, Ken. So,
All right.
ready?
Almost.
Okay.
Okay, Sean.
Okay. Hey, welcome everybody. I really appreciate the opportunity to be with you, and my prayers are with you and your family. I just wanted to cover a little bit of what we're going through, what we're seeing, what people are calling me about, both tenants, landlords, and other brokers. Ken, if you can advance the slide. Okay. Quick little disclaimer. I am not a lawyer, so I don't take it as legal advice. You can go ahead and advance, Ken. First thing I want to give every broker is that we need to look up, look and not down, look forward and not backwards, look up and not in, and lend a helping hand. As an industry, we have been through this together. We had in the early 80s, 18 to 20% interest rates. We had 1986 tax law changes. That's when I came in the business. We had $1 trillion worth of REA assets that we thought we'd never sell. We had the 9/11 attacks. We had the 2008 recession, and we got through this. So please stay positive, stay in. Ken, can you advance? Okay. I love Memphis, and I just want to emphasize that we are 100% in this together. Ken, advance. We will come through this as a CRE industry with MAR, with our commercial brokers. And again, emphasize we're in together. We're an integral part of the city's immediate needs and the solution when we come out of the rebound. Advance. Okay. I'm an eternal optimist most times, but it is a little cloudy. It's a little scary. But there is some sunshine. There are deals out there that are happening during this time that we're moving forward. I talk to brokers, but they're slower. It's a lot less deals. What we need to is keep working on our business, and I'll talk about that a little later. But there's going to be opportunities for commercial brokers to make money. Okay, the first thing I want to talk to you, everybody's getting inundated with calls from their landlords, from their tenants. And I want to emphasize one thing. Communication is the key. If anything that you do during this time, talking to your clients, your landlords, your tenants, getting with them, helping them through navigating all the CARE Act and all the opportunities for them, communication is the key. We cannot let that break down. Landlords need to be talking to tenants, and a lot of times as brokers, we're the facilitators to that. So I'm going to start off, Ken, if you can advance. Okay. Obviously, we all know businesses are closing. I'm in the retail business. I get calls from restaurants, retailers every day. Almost everybody other than grocery stores, liquor stores, and a few others are non-essential businesses. They're feeling the brunt. I was kind of a little bit shocked, honestly, of how fragile our local retail industry is. But we're dealing with those store closings, and that's kind of where I'm going for. How do we deal with that? Ken, if you could advance. First of all, I represent both tenants and I represent both landlords, but landlords are kind of stuck in the middle. They have all these tenants coming to them and saying, hey, Mr. Landlord, I need some rent relief. But the landlord has another partner in this deal, and that's most cases the mortgage lender. Okay, and he can't simply modify agreements. So I think everybody needs to understand that, whether you're representing a landlord, representing a tenant, that we have to bring a third party into that. If you can advance, Ken. Okay, let's talk about dealing with landlords first. There might, as they were talking earlier, in the CARES Act, there are some reliefs for tenants to borrow money that is forgivable that can be attained in the loan documents. So there's opportunities for tenants to be able to pay their rent, get that loan forgiven during that time. But understand that landlords have the relief are limited to under the loan documents. They can't just unilaterally give a tenant a break without talking to their lender. Most lenders are being very compassionate. Most landlords are being very compassionate. But this is also an opportunity for landlords to deal with problematic tenants that prior to COVID-19 were not doing well. Okay, and that's further on discussion. There are going to be condition agreements to defer rent. Almost 100% of landlords are willing to work with tenants in some way. Some have a little bit more of a process than the tenants might like, but landlords also have to deal with things like co-tenancy. If you're in a co-tenant in the project, and this is mostly commercial, if you are co-tenant with a large retailer like TJ Maxx, and TJ Maxx closes their doors, landlords are having to deal with that. If they give TJ Maxx let them close, maybe a small tenant might not have to pay rent. There's a lot of things that take place. You hear a lot of terms of force majeure. I have tenants today sending me force majeure language for new leases that we're doing. Nobody anticipated something like COVID-19. One of the things landlords thought they were covered is business interruption insurance, but in 2006, most insurance companies took out or put in the word does not include virus, which COVID-19 is. So there's no, for both tenants and landlords, business interruption insurance not going to kick in. On the positive side, most landlords are looking right now on their base guesstimate a 90-day relief period, but they have to note all their provisions and triggers of their loan documents. Ken, if you can advance. Ken, can you advance? Okay, thank you. How are landlords responding? First, write out rent reduction. Very compassionate landlords are doing this. They can reduce the rent. I'm not going to go through it all. A rent reduction is just abatement of rent that is never going to be paid back. What we're finding in most cases, landlords are offering rent deferrals, saying, hey, we're going to take this rent and we're going to tack it on to the backside of your deal, maybe spread it over 12 to 24 months or maybe the remaining term, but it's still allowing the landlord to recoup rent. Ken, if you could advance. Okay, the rental abatement, some landlords, you can look at this, is a loan conversion, maybe converting that rent to a loan that's paid back over a period of time. Just different ways to handle it. Also, landlords have some security deposits. Are they going to apply the security deposit to for the tenant to that period? And then subletting, bringing in a new tenant could reduce or eliminate some rent. Some of these are just a very first option to the landlord. Ken, if you could advance. Okay, here's something that a lot of people have a problem with. Most landlords have to follow the rules of their lease. And they're going to, even though they're going to work with the tenant, that modification may require them to serve papers, whether it's an eviction notice, a letter of default. The landlords have to serve, according to their loan agreement, need to serve these papers. They're in the lease, but then they need to call and talk to the tenants and say, hey, we'll work with you. This is just to keep them honest with their lender to make sure they're following the rules. Ken, if you could advance. Okay, now for landlords, after all this, the people that are going to be making the most money are going to be lawyers trying to settle all these agreements, these rent deferrals, rent abatements. The narrative I give to landlords or brokers that are working with landlords is that the landlords have to be fair. When they go back in the court, they're going to have to say they worked with the tenants, they showed compassion for the tenants, if it gets on that point. So that's the one word of advice I will give you that. Next slide, Ken. Dealing with tenants. Okay, I've probably received 150 calls so far about tenants. Again, we just outlined earlier, the speakers outlined that the Corona Aid Relief Act, the Economic Security. we need to push this information onto the tenants. Give them this information, let them know where to apply. I've even providing SBA lenders numbers that are willing to work on this stuff for the tenants. The tenants need to apply for the forgivable loans at the minimum so that they can pay rent so they don't have to pay later on in a deferral. Encourage, as anything I would tell brokers, to encourage them to apply. Ken, if you can advance. This is a statement that, I mean, recently we had a paper come out saying, do not pay rents, just telling restaurants not to pay rents. Simply not paying rent is not an option that we should recommend to any tenant, okay? What they need to do is communicate to the landlord that they're having problems and work out an agreement in writing so that they do not go into default. But do not just tell the tenant, do not pay rent, we'll work it out later. It needs to be worked out as we go along. Ken, if you can advance. How tenants can respond, okay? They need to review their lease. Most tenants probably have never read their lease from the day they signed it. They need to understand what rights they have, including force majeure and different other operating covenants and co-tenancy. You really need to understand that, but you also need to put together your financials. This is a time of transparency for tenants. The tenants need to share how has COVID really affected your business. Some retail businesses that I deal with are still operating. They're doing some income. I have some restaurants that are actually doing better after COVID-19 that are in the drive-through business, and their business is up. And the landlords need to understand that on a case-by-case basis, but this is a time for you to get with your tenants and tell them they're going to have to be very transparent. Ken, if you can advance. Okay, the tenants need to explore government programs. We got to look at worst case and best case, and we need to find between the tenant and landlord a combination of solutions that best help both parties. So the tenants need to be very forthcoming, very, like a better term, part of the process, and not simply stick their heads in the sand and say, we'll pay later. We want to keep the tenants from defaulting. The worst thing a tenant can do, not pay rent, the landlord puts you into default, and then we come out of this and rebound, and now that you're in default, the landlord can renegotiate a rent, the landlord could evict you later on for the default. We got to understand that we're in this together. Landlords, again, are being very compassionate. They're working within the laws of, and what their lender will allow them to do. But again, the tenant has to take an approach. We had a politician recently put in there that the landlord should reach out to the tenants. It's really, in commercial, the tenants need to reach out to the landlord first and say that they need help on that part. Ken, if you can advance. Now, looking at coming out of this a little bit, stores do matter. I think a lot of people wish they could really shop right now. So still remember that people are buying stuff online. But we're going to come out of this, and that's more of the optimist. Stores really do matter. But Ken, if you can advance. So we talked about the landlord, we talked about the tenant, but the real story is the lenders. The lenders are there, sitting there with the mortgage. A landlord pledges his mortgage, pledges his leases to the mortgage to be paid back. They're a party to every lease. That landlord needs to get with his lender and say, what are you willing to do for me, and allow me to extend that to my tenants. Ken, if you can move forward. From a retail side, shopping, we're hurting in the retail business. We're down to essential services, restaurants doing takeout, grocery stores, medical clinics, pet stores, alcohol, places that sell alcohol. We're hurting, and I don't have an answer for everybody, but there are businesses that are doing really well. Grocery stores are killing it right now. Convenience stores, markets, bodegas, whatever you want to call, are all doing very well and very critical to our community. Ken, if you can move forward. The future, I really don't know, but I know the secret is listening and talking with the CRE community, getting together and sharing ideas, sharing ways to make this. We really need to be preparing for the rebound and trying to help each of us get together. Ken, if you can advance. The broker's role. Okay, we were thankful tomorrow that we were considered an essential service, but we're called to duties. We need to help with emergency needs for space. I mean, just this week, I've been working and hopefully finalizing for the Mid-South Food Bank in North Mississippi, a 50,000 square foot warehouse location. We're all called to do that and try to help whenever possible. There's going to be calls for hospital space, warehouse space, and we need to step up. This COVID-19 is going to create opportunities for space and properties for sale after we come out that. Some of them will be bank-owned properties at that time. Some of them will be restaurants that we know, endear, and love that are closed, but they will create opportunities. During this time, follow that, track that so you're ready when you come out. Something that was emphasized by our CEO is communicate and stay in touch with all your clients. Almost every other day, I send an email to all my tenant clients, all my landlord clients, trying to communicate what's happening out there. And I think it's really a good time to touch and feel your clients. It's a good time to work on your business. If you cannot work in your business, actually doing some stuff, work on your business plan, your marketing things. I listened to Mar's presentation this morning to the residential realtors, and that was a big emphasis on the residential side. This is a good time to follow up on all those things that we could not do when we were so busy. And then understand that we will come through this. Ken, if you can advance. Okay, 1099 brokers. She touched on this during her presentation. There appears to be some relief for 1099 brokers. I'll leave it at her presentation, but here's some information. Ken, if you could advance. This is a good time to engage local communities. Get to know your communities, work with them, say that you're out there, let them know what you do. Ken, if you could advance. Together, the brokerage community, and I'm talking right now from all the brokers, but specifically the commercial brokers, we're still in the business of building thriving communities and dynamic neighborhoods. And we're going to do this when we rebound, and we need to all be ready and there to help and remain positive. Ken, if you could advance. My final thoughts, we're open for business. Keep looking up, keep looking forward, and we will come out of this together. And if you need somebody to call, just to talk, vent, do whatever, call a friend, call me. Everybody has my number. And I want to thank you for the opportunity to present today. I will turn it back to Ken.
Sean, thank you very much. For the audience, I just asked Sean yesterday or maybe the day before to co-present. And Sean, I really appreciate your willingness to put some time and energy into this and creating the PowerPoint. And we'll certainly share this as well as the information that both Aaron and Drew have shared. Drew's actually sent a few links that I will send out to the audience. FAQs and other things that the National Association of Realtors has provided. And of course, as Aaron mentioned earlier, this is hourly. We're receiving updates hourly almost. It's all coming so quickly. So with that, Sean, thank you. And Jason, you're up. I'd like to turn this over to you and talk about maybe some of your experiences thus far and any advice you might have.
Yeah, so sure. Thank you. And what a great presentation so far. And thank all the panelists. What I want to talk about specifically is what real on the ground things that I'm hearing, and I'll relate back to Erin and what she had indicated with the economic interruption disaster loan. We're hearing from tenants that have applied that they've been approved and the 72-hour window has come and gone and they have not been funded the amounts that were approved for. So it does sound like that ambitious 72-hour goal of between approval of the application and the funding of it is not being met. So what we are encouraging our tenants to do is do not wait, be proactive. You have to be communicative with your landlords. There's going to be a lot of back and forth as we're all trying to maneuver through this. In talking with a dozen lenders, with the exception of one, every lender has so far been unwilling to have any discussion with regard to what they may be able to do with the landlord who's in maybe a position where he has a property with tenants that either can't pay or are paying short or paying partial amounts. And basically they're being told at this point in time, the landlords for these lenders is that stay current. It is, I think, going to become clearer in the next couple of weeks what there may be in the forms of other government assistance. Things we'd like to see would be what was discussed with the business interruption insurance and the backstop, maybe with the government stepping in and being that backstop for virus protection and that coverage that was removed back in '06. That may be a way to get the mechanism for claims to move forward on those items with the government stepping in and being that for the backstop for those insurers for that specific event. Another would be some specific program that's rolled out that it will cover some type of forbearance specifically for retail, for hospitality. Those are going to be the hardest hit. And going to the tenants, and this is going to be part of what you're going to have to submit when you are applying for the disaster relief programs and the Paycheck Protection Program. Be prepared to show 2018, 2019, and year-to-date 2020 to your landlord. If you are coming to the landlord to ask for help, you have got to be transparent. We have to truly see into what's going on in order to be able to provide relief where it's really needed. And landlords are very sensitive to those tenants that are hurt right now, the retailers that are completely closed, the ones that are partially open and operating at a skeleton crew. Are the ones that are going to require the most focused response to. The ones that are still open and operating that come to a landlord and they're asking for rent relief, but they don't really need it, is not going to be received very well. And so if you do need it, be prepared to show everything. So beyond that, I think that we will have to just continue to work together and try every day as we get up. It's a new day here and what we're learning and how long this might last in terms of the window for the stay-at-home orders and the business closures. So it's a fluid thing, and the answers that might be relevant and correct today may not be tomorrow. So just be prepared to react and react accordingly. But start planning. Be prepared to show what you're doing and to mitigate your issues as a business for your landlord and what your plan is going forward when things reopen. The landlords are going to have to do the same with their lenders. We're going to have to identify as a landlord the problem tenants to our lenders and say, okay, these are the problems. Here's what my plan is going forward once we come out of this crisis and businesses start reopening. And so everybody's going to be transparent in this, and I think it will ultimately work itself out over time with government assistance as well. But it is truly a deluge of information that's coming into everybody and then trying to figure out where to go with it to find relief for your business. And it's going to take some time, but I think ultimately working together, we can help mitigate the damage caused by this virus to everybody.
Very good. Thank you, Jason. Thank you all for your participation today, and both to the audience and to our panelists. We're actually recording this webinar, and so we will post this via our MAR YouTube page at some point. So folks that have not been able to see the whole program will have the opportunity to do so. With that, I would like each of our panelists just to give one parting thought before we adjourn this meeting. And I'll start with Aaron, and then Drew, and then Sean, and then Jason, and then we will we'll close the program.
Thank you, Ken. Parting thought, I guess would just be to stay tuned. This is really unprecedented what we're seeing. So there's nothing we can really model this after in terms of how Congress and the administration, the economy as a whole is going to react to this. So right now, the approach that NAR is taking is pretty much everything is on the table. We're talking to congressional offices, we're talking to the administration, we're seeking relief that's on the macro level and then down to the individual industry types that our members work with, their specializations, etc. So keep the lines of communication open, reach out to us if you're seeing something in your market that you don't think is being addressed that could be on a federal level. And yeah, just keep on checking nar.realtor. We'll be posting updates minute by minute if needed. So thank you so much.
Thank you.
Yeah, thanks, Ken. I would kind of echo what Aaron just said, and really, I guess the way that I would put it would just be simply because we are sheltering in place, because we are stuck in our homes in many cases, doesn't mean you should disengage. In fact, in this instance, you should really become more engaged, because I think it's really dependent upon us all to work together to get through this, and we will. I like Sean's optimism. I think, you know, hearing just a few minutes ago before I joined this Zoom call, I was on one, and one of our researchers and economists was talking about how things may continue to dip, but that they're expecting what economists call a V curve. So things may dive quickly, but should rebound very quickly. And so I think that's good news for us all. But in order to make that happen, we have to continue to work through these tough times right now, and stay positive, and keep a broad outlook for where things can be, hopefully in just a few short months.
Thank you, Drew. Sean?
I'll echo kind of what Jason was saying. This is a best time for us to really build a relationship with our landlords, our clients, our tenants, by talking and keeping that open line of communication. We're really sometimes too busy to do this, but this is a great time. And I will end it with look up, look forward, and look out.
It's great, Sean. Thank you. And Jason?
Unmute. There we go. I would say, can you hear me now? Is that good?
Gotcha.
Yeah, great. So I would say, you know, as a parting thought for me, we know that this is going to be going forward a fluid situation. We are prepared every day to get up and do our best to try to advise our clients to the greatest degree we can with the information we have available as realtors. You know, the commercial, the residential practitioners out there. I mean, we are the guides for people who really are seeking answers and are very uncomfortable and scared. And so us armed with the information that we have available to us, study it, learn it, be prepared to talk about it, and help your clients figure out how to navigate this tough time.
Absolutely. Well, thank you all. We are going to close this program this afternoon. We appreciate all of your participation. Please, members, audience, reach out to me, even if you just want to talk and chat. Because as an admitted extrovert, these last few weeks have been very painful, and so it's good to have that social interaction, even if it's via Zoom and some of these other platforms. So thank you all. Be safe, and we will continue to provide as much information as we can so that you can go about your normal routine, or as normal as it is at this point, going forward. So take care, everyone. Thank you.